Okay, traders, 1 minute mindset reset, probably a bit longer than a minute. Today we're talking about don't chase the hot chick at the bar. One of my mentors, Alex Temez, told me or talked about the hot chick trade, the hot chick, ignoring the hot chick. And I'm sure, no offense to the ladies out there, and you could use the hot guy. When you're young, or when you're going out, or you're night clubbing and you're out in the town and you're with your mates, and the hot chick walks into the bar, everybody's chasing her, everybody's all over, or they're all eyeing her up, they're all chatting her up, trying to buy her a drink, get her number, all those sorts of things. And the market's a lot like that. The hot chick is the hot stock, or the hot commodity, or the hot currency that's moving, and everybody's, it moved in London, and so they want to get on board in the US, or it moved in Asia and they want to get on board in the London session. And sometimes the hot chick is what distracts you from the real trade that's setting up, that's perfect for your best setup. And one of the things that I had to work on for a long time was keeping my eyes on the pairs that were matching up with my best setup criteria. So a lot of people have been emailing me, do I see any good setups? This was my best trade setup. And the important thing to understand is that the setups they build up. And when you understand what that means, they're building up volume. Now, sometimes the move itself in a session is already the trade going back through volume. We can have an Asia, London, New York trade. We can have a London, New York, Asia trade. We can have a New York, Asia, London trade. And that all comes back to the template. Day 1, day 2, day 3. Now, for example, gold moved off the low of the day into the US 12 candle window last night and opened in the middle at the New York Open. But the real trade, from one of my best trade setups, first red day, Japanese yen, first bar trade at the US session, straight down 100 pips. Now again, I talk about being biased to the downside. Oil, 9:30 New York, the open of the NYMEX market, high of the day, pin hammer, straight down 100 pips. There were traders in the Northern Hemisphere, and some of the traders that stayed up and traded the gold trade. Now, I want you to think about something. I talk about 1, 2, 3, the weekly template. Understand, pump and dump, the charts that I'm trading, some of the trades that I take where they're scalps, even though they might move 150 pips. Understand this: 3 levels of rise, sideways, and drop. And that can go the other way for longs. It's the same thing for longs. We saw that on Wednesday on gold at the low of the day. So I want you to think about this: 3 hours, 3 levels. We can get 3 sessions, 3 levels. And again, it doesn't have to be Asia, London, New York. This is where a lot of traders are scratching their heads, maybe when there's a morning trade in Asia. But then I want you to understand this: day 1, day 2, day 3. Okay, now go and study your templates. Day 1, day 2, day 3. Is every week going to be a perfect 1, 2, 3 sideways first red day drop? No. It might be like oil. First day is a sideways market, narrow range. But if you go study that, 3 peak formations underneath, 3 peak formations on top. Day 1, day 2, day 3 trend day with the trade. A trend breakout out of a consolidation rectangle. Again, a classical geometrical pattern. All these geometrical, parabolic, rectangle, head and shoulders, ascending triangle, descending triangle, wedges, they show up every single day. So when I say identify your best trade setups, they don't have to be my best trade setups. As I said, I'm biased to the short side. And your best trade is not necessarily your best trade setup, but it might be. But you need to deconstruct it. So when I take some of these head and shoulder pump and dumps, okay, understand that breaks down backwards. Deconstruct that and go backwards and look at the bigger chart. New York, Asia. Asia puts in a low, goes up 3 levels and goes sideways into the London Open, boom, right back to the low of the day. Somebody said yesterday, you're in the matrix. How does that work? You said that's inside the matrix. The low of the day, the high of the day. They go up 3 levels, go sideways, lock in the high, go sideways. The first bar of London is the high of the day inside of the peak formation. The first bar of the London Open is the high of the day. Where did it go? Straight down to the low of the day. So again, really study those templates and be able to differentiate. Movement does not necessarily mean it's a trade. Now, again, that's my perspective, because I'm not looking to get pips. I'm looking to where is that market about to collapse or go vertical, because I don't want to be at the screen chasing moves or chasing pips. I want to know, when is my setup there? My setups are about capitulations. So when I see something moving and it's taking off but I'm inside, that's hard, because now you're faced with the choice of chasing a move inside, right? So you either need to be in at the low or in at the high. Now for me to stay up an extra 2-3 hours, again, go back to gold and think about this. If it's the move starts at 8 o'clock New York time and it's going vertical and New York opens inside, the 9:30 open is inside. That's 1 hour. Now we're into the second hour. It goes to the high when the third hour opens. That's a 1, 2, 3. 3 levels of rise. It went sideways. So now do the math in your head and think 3 levels, 3 hours, Monday, Tuesday, Wednesday, same thing. First red bar, first red hour, first red half hour, engulfment, sideways, double zeros, high of the day. I'm selling it. So think about the same fractal patterns that we talked about a few weeks ago in those videos. The same things occur. Okay, just come back to timing, the time of day. If you're looking and chasing all these little 1-minute bars, okay, go back to the time of day. 1 hour up. Sometimes it's one, like this morning in Japanese yen, pound yen. 1 hour up, 1 hour down. There was 25 to 40 pips. They went up, went sideways, first hour, locked it in, short trade, boom, straight down, 25 pips. You know, so again, it depends on what your style, what your risk tolerance is, all of those things. But coming back to what we started talking about don't chase the hot chick. Know what you're looking for. Know what you're looking for, because you might be in the move that was the hot chick, and then it might move again later, but you need to have a reason for getting into that market. There might be a better candidate that everybody's not paying attention to because they were chasing the hot chick. Japanese yen. The difference being, again, remember, it's not about how many pips, it's the type of trade that it is. If a market's going to collapse 25 pips straight down with zero heat, that might be a lot better than a 75 pip move that auctions back and forth for an hour and a half that doesn't even allow you to get out at break even though it goes 75 pips. Where would I have been able to put any size on that? I'm looking at trades where I can put size on, because if I can't do that, or if I have to sit there back and forth, back and forth, back and forth, it's too much stress. I know realistically that's not how I want to trade. I want to take the trade where it's about to blow through the roof or crap the bed. So hopefully that makes sense. Anyways, don't chase the hot chick. It's Friday. Like I have to say, I'm flabbergasted at the trading opportunities that we have had this week. We have just had textbook trades everywhere. And the thing is, the more you start to just focus on pure, clean setups, the more this starts to jump out and stare you in the face. The red car starts to show up everywhere. Finish the week strong, traders. Keep it simple. Focus on your best setups. And may the markets go with you.